Here, welcome back.
It's good to be here. Nice to see you.
So are these kind of game-changing innovations that we're seeing on the COVID front from some of the big companies leading to more activity in the private markets, and whether it's, going into venture capital or private equity or even IPOs and around some of the other biotech names?
Well, I certainly think this is a validation of what's happened over the past decade, for sure. And if you've seen the amount of money that's been raised for biotech companies in the private markets and in the public markets, it's probably close to $300 billion over the last 8 years, $200 billion of that probably in the public markets. And access to that kind of capital from, pension funds and from mutual funds and hedge funds is really what's fueled the ability for the industry to grow up significantly. And when you look at what Pfizer and Biotech have done, they're beneficiaries of that capital formation. And we talk a lot at Cowen about the importance of having biotech companies get access to capital, because that is the lifeblood for them to do drug discovery. And when you think about how quickly they have mapped this virus from a genomic standpoint, and then being able to have targeted therapies, as well as vaccines like the one that Pfizer and Biotech announced, that is a function of the fact that the capital markets have actually given biotech companies in general the capital they need to develop this technology. It's really remarkable.
How much more room to run is there, in your view, for the whole biotech trade?
Yeah, so we think we're still actually in the early innings. I know it sounds hard to say that because we now have 500 publicly traded biotech and tools and diagnostics companies out of the 6,000 companies listed in the United States. So it feels like it's been going on for a while. But the way we look at it, with that $200 billion that's been raised in public money, about $700 billion has actually been taken out by mergers by big pharma and big biotech that have bought smaller biotech companies. So when you talk about that, assuming there's been no fund formation, which there has been, you have about $500 billion of incremental capital that's looking to make investments. And I actually feel like the challenge for the industry is finding high quality management teams. You can only take so many companies public a year because the science is hard to understand. And it's not like taking, consumer companies public. That's much more difficult for people to get their heads around, these drug therapies. And so when you look at it, the dynamic actually sets up really well for the next decade in biotech, and particularly in tools and diagnostics with genomics and proteomics, and all these things are going to make drug discovery, much more robust over the next decade.
Jeff, pivoting away from biotech, I wanted to ask you more broadly what you expect as we head into 2021 on both the IPO and M&A front. There was quite a rush of it ahead of the election. Do you think that's brought forward a lot of action, and that we'll have a bit of a lull at the start of next year?
Well, actually, we're not seeing a lull coming. I mean, it's hard to say that, with all the financing that has gone on in 2020, that it'll be the same in 2021. But we're certainly not seeing a slowdown in the number of companies that really want access to capital. I mean, I think the lasting effect for corporate America is if you had access to capital in 2020, you're a winner. May not be apparent today with your stock price, but it's just a matter of survivability. And those that had access to the public markets are going to fare better than those who didn't. And so I think you're going to continue to see companies now relook at the public markets as a viable way to grow their businesses. As it relates to M&A, we are starting to see that tick back up again, particularly middle market M&A, where we tend to focus more. There's more mandates being won, and we think that as people figure out how to do M&A virtually, and I think travel picking up probably towards the middle of next year, there are a lot of people who, again, they came through this period of time, or maybe they thought they were going to sell. They had a scare, and now they're going to be anxious to sort of print a ticket. And we think that we're seeing that in our pipeline, a bunch of things. 2021 should be a good year for M&A.
And Jeff, in the short term, what about the election? Are CEOs that you're speaking to in any way nervous that we haven't had the president declare that he is the loser?
Yeah, I mean, he's not going to do that. And I think everybody knew that going in. It's just not in his nature. None of what's happening is a surprise to the CEOs that I speak to. They may have their own feelings about it, but it is what it is. And the public has spoken. There will be a new president in the White House, most likely on January 20th, just according to plan. And the markets reflect that. I mean, and so the CEOs that I know were worried about aberrant things happening in a super tight election. And we waited an extra 4 or 5 days. In the larger scheme of life, it's not that big. So people are moving on under the presumption that Joe Biden and Kamala Harris take office on January 20th.
Shepard Smith here. Thanks for watching CNBC on YouTube.